Hi students. So in the last class we discussed what is meant by transaction and events and related cases. And coming to the next topic, the important terms relating to the accounting. The first one is what? Assets. What is meant by assets? Assets is nothing but it is an economic resource controlled by the entity, created based on past events. It is an economic resource controlled by the entity, created based on past events, and providing some economic benefits to the entity in future. Providing some economic benefits to the entity in future is said to be a what asset? Assets transfer, it is an economic resource controlled by the entity, created based on the past event, and providing some economic benefits to the entity in future is said to be a what asset. So, first of all, here, what is meant by economic resource? Resource stands for those which are available for utilization are said to be a what resources, and economic resources stands for so those resources which are measured in terms of money or money's worth. So this is simply is nothing but what resources which are measured in terms of money are covered under what economic resources. So it is an economic resource. Simply it is nothing but available for utilization to the entity and controlled by the entity. What is meant by control? Generally, control and majority of the persons think that control stands for ownership. And not only the ownership, control stands for do you have the right to restrict the access of the products to the third party? So, if you are restricting the access of the product from the another, then you are said to be having what control over the respected asset. Control over the respected asset. For example, you purchase the plant and machinery, or you purchase the vehicle, and how to use the vehicle and where to use the vehicle and for what purpose you are utilizing the asset, that completely up to you only, and no person can involve. And if they wanted to use it, they need to take the permission from you. So you are restricting the access of the product. That's why you are said to be having what control. So control is defined as what? Having the right to restrict the access of the product is said to be a what control. Is said to be a what control. And generally, this control previously there is a word called as it is an economic resource owned by the entity. But later, owned is replaced with a control because of one concept called as substance substance over the form. Because of this concept, that word was introduced in the definition of what asset. And here, for example, I purchased the plant and machinery for rupees 10 lakhs. Then I am the owner of the respected plant and machinery. No doubt, I had the control over the respected asset. So it is treated as an asset to me. For example, if I purchase the plant and machinery on hire purchase basis, if I purchase the plant and machinery on installment basis or EMI basis, In that case, what happened? So generally, I make the down payment and I receive the plant and machinery and will utilize it for day-to-day operations of the entity. At the end of every month or every period, we are making the installment. After completion of the last installment only, you are getting the ownership over the respected plant and machinery. And that is the concept of what hire purchase. And here, in case of hire purchase, you are not treated as a owner till the payment of the last installment. And till that, you are having the possession of the product without getting the ownership. But even though in substance over the form, they clearly state that the reality of the transaction has a priority over legal formality. Simply having the pending of legal formality, you can't say it is not my asset. So here, are you utilizing the asset for your business purpose? Yes, I am utilizing it. And the second question is, will you get the ownership over the asset in future? Yes, I will get. In that case, you can treat it as a asset in your books of account as per which concept substance over the form. So control is defined as maybe you are the owner of the respected asset or you may be the future owner. So at the present you are the owner or you may be the future owner and you are having the title of the product at the present or you will get the title over the product in future. So that is said to be about control. So it is an economic resource controlled by the entity. It is an economic resource controlled by the entity and created based on the past event. Created based on the past event. And because of happening of certain events or certain activities in the future, and we have that item at the present in the books. And means because of purchase of that plant and machinery previously, because we have that one and for example, we purchased the goods, 1 lakh units we purchased. Out of that, 80,000 units we sold. And still we have 20,000 units in hand at the present. That is also said to be about asset. So, asset is created based on some past events, and providing some future economic benefits to the entity. So providing some future economic benefits to the entity in future. So here the future economic benefits may be in terms of goods or in terms of services, etc. It may be in any form. For example, I have the cash in hand. Then I can utilize the cash for any purpose in future. So that is said to be an asset. I have the goods in my hand. I can sell the respected goods and encash it and realize the amount in terms of what cash. I am getting the benefits in terms of cash. That is said to be an asset. If I have the plant and machinery, I will use that plant and machinery for production of the goods in future. So here I can produce the goods and will utilize it. So here benefits are in terms of what goods. I have the motor vehicle. I will utilize it for transportation of the employees from one place to another place, or transportation of the goods from one place to another place. So they are used for providing what services. So economic benefits will get either in terms of goods or in terms of service or in terms of cash in any form. You will get some economic benefits in future. So it is said to be about asset. So asset is defined as what? It is an economic resource controlled by the entity created based on the past event. It is an economic resource controlled by the entity created based on the past event and providing some economic benefits to the entity in future is said to be about asset. Is said to be about asset. Example, land is said to be about asset. And even goods purchased by the entity are also said to be about asset. Plant and machinery and furniture and fitting and patents, copyright, etc. These all are said to be about assets. Okay. And next up, assets or generally classified into the two types. One is current assets and another one is what non-current assets. One is what current assets, another one is what not current assets. And here this classification is provided based on tenure of providing economic benefits. So within how much period will get the economic benefits by the entity. Based on that, the assets are classified into the two types. And one is what current assets, another one is what non-current assets. And what is meant by current assets? Current assets are nothing but assets which are providing the economic benefits to the entity within 1 year. So assets which are providing economic benefits to the entity within 1 year. Assets which are providing economic benefits to the entity within 1 year are said to be a what current asset. Here, this 1 year is calculated from the date of closing of the year. From the date of closing of the year, generally we call it as a date of balance sheet. Date of balance sheet. So, generally, for example, if the say 1st April to 31st March is the accounting year. And on this day, generally we are preparing what financial statements of the entity like balance sheet, profit and loss statement, etc. So on the date of balance sheet, we have to assess whether the asset is providing the benefits within 1 year or beyond 1 year from this date. So if the asset is able to providing the benefits within 1 year from this date, for example, we are at 31st March 2025, then 31st March 2026. If those assets which are providing the benefits within 1 year from the date of balance sheet are called as what current assets are called as what current assets are those assets which are providing the benefits for a period more than 1 year, so those are treated as what non-current assets. So here the base date is nothing but what balance sheet date and nothing but date of closing of the deal. So on the date of balance sheet, if you assess whether that asset is able to providing the benefits within 1 year or beyond 1 year. So within 1 year, that is treated as that is classified as what current asset. That is classified as what current asset. For example, stock. Stock stands for goods in hand. Stock stands for goods in hand. If you have any goods in hand, and generally goods are held for what purpose? Trading purpose. If I am a furniture dealer, I purchase the furniture and sell the furniture, right? So I hold the goods for trading purpose, and I will sell the respected product as and when the buyer come and ask for the respected product. So that is immediately we'll sell it. Okay. And another one is cash. It is always available for utilization purpose for at any time. And another one is customers, and those are treated as what debtors. And the debtors, if you sell the product on credit basis, then that customer is named as a debtor in our books of account. And generally we granted a credit period to them, and in normal cycle and the credit period is around 90 days. and it will realize the amount of within 90 days from the date of sale of the respected product. That's why from the balance, when we comparing from the balance sheet date, definitely it will realize within 12 months. That's why they are classified under what? Current asset. Okay. And non-current assets. Simply said, other than current assets. Other than current assets. And they say nothing but so providing future economic benefits for a period more than 1 year from the date of balance sheet. So it is providing what? Future economic benefits for a period more than 1 year from the date of balance sheet. So for example, the plant and machinery and furniture and fittings, furniture and fittings and motor vehicle, patents, copyright, etc. These are all treated as what? Non-current assets. General, for example, if I purchase the plant and machinery, I held the plant and machinery generally for producing the goods or for providing the services. Use investment we incurred on the plant and machinery. So generally they meant for a period more than one. The life of the plant and machinery is around more than 1 year, like 5 years or 10 years, etc. It is providing the benefits for around the life cycle of the respected asset, say 5 years or 10 years. That's why it is treated as a non-current asset. For example, coming to the college, in the college they are using the tables, benches, and the benches they purchased for providing what? Education services. And at the end of every batch, they didn't replace the respected benches. For generally, if you purchase the bench, generally it will be used for say 5 to 10 years. Say 5 to 10 years. So it is providing the benefits to the entity for a period more than 1 year. So it is treated as what? A non-current asset. And based on the period of deriving the benefits, we classify the assets into two types. One is what? Current assets. Another one is what? Non-current assets. Okay. And another classification, and based on tangibility. Tangibility stands for, are you able to see it or touch it? Based on that. So assets are classified into the two types. Tangible assets, intangible assets. Tangible assets means those assets which can be seen and which can be touched. The assets which can be seen and which can be touched are called as what? Tangible assets. So example, plant and machinery, land and building, furniture and fittings, etc. For example, land and building is there. So physically it is available. So we can see and we can touch. Those are said to be what? Tangible assets. And assets which can't be seen, which can't be touched. Means simply said, it is not having any physical existence. It is having the existence in terms of a document, in terms of a document, like patent, license, copyright, etc. So these are all said to be a goodwill. These are all said to be about intangible. For example, if you are having the reputation in the market, that reputation is not available physically in the market. So you can't see and you can't touch, but you can listen. So that type of elements are covered under what intangible asset. Patent is simply is nothing but the right over the respected product you have. So ownership rights we have over the respected thing. So generally those are having in terms of what document. Those are physically not available. So are covered under what intangible assets. Okay. So based on tangibility, assets are classified into two types. One is tangible asset, another one is intangible asset. Okay. Then this is what is meant by asset. So asset is nothing but what? It is an economic resource controlled by the entity, created based on the past event and providing some economic benefits to the entity in future is said to be a what? Asset. Okay. And some economic benefits will get in future, definitely. No benefits will get by using that item. It is not never treated as a asset. Okay. And next, gender based on the period of benefits derived, assets are classified into the two types. One is the current asset and non-current asset. If the asset which is providing the economic benefits to the entity within 1 year from the date of balance sheet are classified under current asset. If it is able to providing the benefits for a period more than 1 year from the date of balance sheet are covered under what? Non-current asset. Okay. And based on the tangibility itself, assets are classified into the two types. One is the tangible asset, another one is intangible asset. Assets which can be seen and which can be touched are covered under tangible, and which can't be seen and which can't be touched are covered under intangible asset. And this is what is meant by asset. Okay.